Well, the two main emotions that drive Wall Street is the emotion of greed and the emotion of fear. You can see this emotional greed because there's a term that's called FOMO, the fear of missing out, where you start seeing more and more investors piling into company stocks that have higher valuations, that might not have any revenues, have a negative book value, that are extremely risky bet, more speculation, and you see the markets moving up higher where we had 3 years of double-digit returns going back from 2019, 2020, and 2021. But then when you have markets like this year, where we get into 2022, where the Federal Reserve is making changes to their monetary policy to help bring consumer inflation down across this country, the emotions can shift from greed into fear. And what we have seen in our 33 plus years of business is that the emotion of fear can do more significant damage to a portfolio than the stock market ever can or ever will. Because what fear does and that emotion that it stirs up, it really pushes some investors to the edge to where they're making short-term decisions within their investment portfolio, but they're doing it for long-term assets. One of many things that we do for our clients here at Davidson Capital is we help separate their emotions from their retirement nest eggs or pre-retirement nest eggs. And as a pure fee-based only registered investment advisor, we have that discretionary control to be making the buy decisions and the sell decisions inside of our clients' portfolios, but doing it from a standpoint of our decades of experience of being in the trenches managing money and helping separate that emotion from our clients. And so the biggest piece of advice I would have for any investor, whether you're working with an advisor, whether you're managing your assets yourself, you have to maintain your intestinal fortitude and keep your emotions in check. If you have the proper asset allocation, the proper balance, the proper security selection, and the active management, the combination of all of that will definitely help your emotions stay in check because you'll be avoiding a lot more of the peaks and the valleys inside of your portfolio. And if there is anything I could teach any viewer about investing on Wall Street, it's not how much money you make on the upside when the market is going up and grabbing every single percentage point of return. It's how shallow you keep your hole on the downside. And because a shallower hole allows that investor to recover that much faster on the other side of a correction or a bear market like we're facing today. If you'd like to learn more about us, you can always go to our website at davidsoncap.com. You can also subscribe to our podcast. Click the radio show link